Yes, hello everybody, this is Gabriel. I took an interesting trade a couple of days ago that got stopped out today. I would like to show you. Why is it interesting? Well, first of all, it's a good example of how systems can converge, like in this case, system 1 and system 2 can converge at the same time, generating an entry. Second one is it's a good example on how the 200 simple moving average can be on one chart, can be a support, and on another time frame of the same pair, it can be a resistance. Then how higher time frame analysis, analyzing the forex markets, brings actually a lot of insight on whether it makes sense to develop a trade into a swing trade. So let's see how this trade looks like. So this is the trade in the euro pound short on the 3-minute time frame. We can see this is the S2 pattern with a flat line here and entry right where the arrow down is placed. The stop is above the consolidation. So this is the entry, and I've marked a prolongation of the flat line. So this whole pattern is actually an S1 system 1 pattern, but in one lower time frame, the 1-minute chart. This is the pattern on the 1-minute chart, referring to higher time frames of both trades. The rule set is fulfilled. I don't want to get too much into detail, but it's an example how system 1 in the 1-minute chart and system 2 in the 3-minute chart trigger at the same moment of time and at the same entry level. And this obviously gives an additional edge to the trade. It has a much higher probability and a better follow through. So my entry chart I call TC is the 3-minute. So one higher is that's how it looks like, really nicely downtrending and very smooth. Now the 200 simple moving average now comes into play here on the 15-minute chart. We can see the consolidation that can be seen in more detail on the 3-minute as well here on the 15-minute. So the stop is placed above this red wick. So we're a little bit zoomed in. So the stop is placed above the red bar. So the stop, as we're going short, is protected by the 200 moving average. This price is already below, and the stop is above. So the SMA is in between. That's called that can be called a very good stop protection. Let's have a look at one higher time frame, the 60-minute chart. How the 200 acts as like a magnet to price. In the 60-minute chart, we can see again the 200 simple moving average. Now it's in close proximity of the current price, and whenever that happens, there's a tendency that the 200 acts like a magnet, meaning that the price is attracted and wants to cross through the 200. We could see it here in past price behavior. The 200 is really relevant. We saw here a test. Price shied away. Another test of the 200. So price getting closer and closer. Then it's going above the line, sitting on the line. So now now the game plan is we get a test, another test from above. So the 200 acts like a magnet. To bring everything together, we have system 2 here, and in the low time frame we have system 1, so that's already a good edge. We have another edge that's the 200 moving average in the TC2, 2 time frames higher of the entry chart, that acts as a support, as a stop protection, and in TC3, 3 time frames higher, the 200 acts like a magnet. That's the game plan of the trade. So we can actually trade the TC3 time frame chart lower by having a very low risk entry. So this is how it develops after entry. It didn't go off immediately. It was consolidating a little bit further, and at some point of time it started to run. I've been moving my stop at the lower high here, and I'm really getting now very keen on trading this cut through the 200, and there's a big number just below the 200, the 89. So the game plan is now not only to cut through 200, but as well through the 89 level, under which stops are placed to make a stop run. So at that point of time, I've decided to transition this 3-minute short trade into a swing trade. This means I'm taking off another quarter of position, and at the same time I'm trading my stop at one time frame higher, so the TC1 time frame. So I'm still trailing here. It's towards end of the week. It's a Friday closed, and I've moved my stop to the last dominant lower high. As I'm keeping the trade over the weekend, it has good potential here to break lower. I'm keeping it over the weekend, so there's more additional risk due to a possible weekend gap on Monday morning. So I'm taking off another quarter of the position here, and I'm holding now 50% of the original position that was taken on here. So the game plan with the swing trade is, once the trade develops really well, to move the trailing stop one time frame higher and another time frame higher. So here I've decided to trail the stop now on the 15-minute chart. That's a TC2 time frame relative to the chart where the entry happened. There's a clear dominant lower high. So that's where I've tried the stop. We can see here that's a weekend gap. There was only a small gap, and since Monday morning here, price has slightly moved lower. On the overall time frame, the 240, the TC4 chart, we can see clearly here that it's now testing the 200. It's spiking through, but sitting on top. So the next thing that should happen, according to the plan, is that we should see a test through a spike through the big number. So this is a little bit later. This is actually what happened. We can see the spike through. Well, I was expecting, obviously, that the price even moves lower. We have two additional stop run levels further down. The price didn't do that in the first run. While I was stopped out with this pullback, I was stopped out here. We can see the line represents my stop. So I was stopped out here with this oval pullback to the 21 moving average with a nice hour winner, a 4.3 hour winner. I hope that was of interest to you. Thank you.